day. Ira Epstein of Linn & Associates with your metals market update, and this is for Monday, the 17th of June, 2019. We're getting on to 5:25 p.m., which means all the quotes you see behind me with boards, these are markets that have reopened for Tuesday's session already. So gold is up from Monday's settlement price, 60 cents. Silver's up about 1/10 of a cent. Copper's up a fraction. Stock market's still up. Remember, you begin the FOMC two-day meeting tomorrow. It'll culminate on Wednesday with a statement and then a press conference afterwards from Chairman Powell, and the market is waiting on that. That's what I can tell you. On the energy markets, they've been under pressure, a slowdown in world economies, but I am looking at what's happened to freight rates. If you want to ship oil in the Strait of Hormuz or the Gulf of Oman, the rates used to be $15,000 a day for an oil tanker. Now, there's different sizes, obviously, but I'm giving you a point here. At $30,000 now is what they're going for if you can get a tanker. People don't want them going out there. So this has all become part of the issue. Iran has succeeded in disrupting the flow, and that flow of oil typically is going where? A lot of it China and Japan. Maybe they should be sending their ships in to escort the tankers because, again, they were the good clients of Iran. If you take a look at the weekly chart of closes, you're backing off a little bit in the gold. You know, it's only into a day and a quarter right now. We just opened. So a little bit of a pullback. You still have this weird pattern of a drop down, then a spike up, and then a pull back in the market. And if you'll remember my gold report, we were talking this 1336 area was going to be something of a resistance zone. You're in that zone. And that was called the first price count. So the market needs another piece of information, I think, before it makes any decisions on what to do. As time is going by, though, the good news is the 18-day average of closes is approaching this low. Now, the low of this day was 1323.60. That 18-day average is up to 1322.40. I'd like to see it climb a little bit more because if the market pulls back to that number, what takes place is you then look at that as a potential support without taking out that low. Maybe you can get a chart pattern of higher lows, higher highs going. In terms of resistance, it's the upper Bollinger Band, and as you can see, when you first hit this area here, you came back and back up. That second hit, if you will, that's the one that has caused some of this momentum to disappear, and that's all I can say is momentum. When I look at the slow stochastic reading, you're in overbought condition. So you have an overbought market that is not trending according to a pattern of higher highs, higher lows. It is clearly taken off to the upside, and now it appears to be consolidating that gain. In the GLD ETF, you have a different pattern, higher lows, higher highs. That's what I call a clean chart. Now, as I look at what the slow stochastics are doing, both numbers are over 80. Both numbers were over 80 on Friday, and both were over 80 on Thursday. That means you've converted this market from overbought to locked in a bull trend. And if the market loses the red reading, the K reading at 83.94 under 80, that could be a sign that the market's ready to give a correction back to the 18-day average. Barring losing it, I still think the pros are buying this market on the breaks, still looking for the higher highs because that reading takes over the chart. In the GDX ETF, embedded reading, not the nicest pattern because you've got the lower low and the higher high, but this market's holding together very well, which means when the mining stocks typically lead the gold market, it's said to be a bullish scenario. I'll buy into that still. The gold-silver ratio, I've changed it now. So now I've got August gold versus July silver. Still very similar to what it was in the 90.62 range, but June gold to me is going to be gone shortly. We might as well start tracking the August. In the July silver, I guess you could argue different things on the chart. You got a lower low than this high at 1512. If you take a look, this high right here was 1515. So I was looking at this just as I was doing it, trying to figure out, I guess I could put the arrow down here and take this one and put it up there. Why? I have the lower highs and I have the lower low. So I'm going to call the trend down, the bias up, because you're over the 18-day average of closes. In other words, I'm going to change this pattern, and I'm just going to leave momentum saying the market is flat. In the copper, I think there was big-time short covering today. If you take a look at the action prior to today, you've been fighting the battle at the 18-day average of closes, and this market has fought that battle before. If it drops, I would look for the Bollinger Band to potentially offer some support. My theory is the first time you hit a Bollinger Band after you hit an 18-day average, it often is a support zone. The market goes down today, goes into that number, goes to a low of 261.55. The lower Bollinger Band, 261.65, and the market finishes the day at 264.65, and now I'll look to see how the market does at resistance of the 18-day average at 265.70. Platinum, I wouldn't be surprised if it has the power to get down to that lower Bollinger Band for the market to hit it and see the pros take money off the table. In the palladium market, you had 5 days in a row over the upper Bollinger Band. I count each successive day as one of the 5 percentage points as a rule of thumb of 95% of the time the market will stay within the band and stay out. It can go a 6th, it can go a 7th, but in charting, you look at the odds as to what the market typically does. After 5, I'm looking for the market to move to the right-hand side of the band. All that means is this is still a very strong market. It did it today. The odds favored that, and it's still there tonight. You have the embedded reading. I would not be surprised if pros are buying this market on the first good break, still looking for higher prices to come. In the dollar index, I've moved to the September, so you should no longer be tracking the June anything in the currencies. You should be moved over, and it's bullish. Higher lows, higher highs. There was a successful battle at the 100-day average of closes when the market was coming down. In fact, if you look at it even like that, that was bearish. But once you hit these Bollinger Band areas, the first time is where I think pros take money off the table. And the market came back. Now, when you cleared this high, 96.40, that probably did the downtrend in, and I think traders went to the sidelines, which makes sense. Remember, you have the FOMC announcement coming out this Wednesday. I think traders want to see that. The Bank of Japan has its monetary policy meeting this week, and the Bank of England. So there's a lot going on. In Portugal, the European Central Bank has a forum similar to our Jackson Hole, and I'll be wanting to read a lot about that as that has been going on. I want to remind you, one of the things we do is we write on a lot of these markets, energies, the metal markets, and so on. If you'd like to get our information on what we do, and you might want to see my reports while you're at it, if you go to our website at www.iraepstein.com, you'll see a carousel of free offers. Just click on the carousel, the offers will show up. Pick yourself what you'd like, and away you go. Do remember that a lot of our information is oral, and it plays through either our handheld devices and or our desktop charting software. We have 2 versions of that, by the way, an HTML and a Java-based. So if you'd like it, simply give us a call or go to the website, sign up. I'm Ira Epstein. You have a good day. I'll see you tomorrow.